Hi, I'm Beat Nussbaumer from macrobeat.co.uk. A volatile week without real net direction. We had a bit of risk off on the back of the Korean wobble that we had midweek. Obviously, the fresh outbreak of COVID-19 in Beijing, as well as the higher numbers in Texas, Florida, and some of the other US states is obviously a big concern. This created a bit of volatility with downside on risk in equities and FX, but there wasn't really any rollover of risk given the recent data from yesterday just showed a little slowdown of the intensity of the new infection. So that just seems to calm the market as it has done in previous times, given the market is still more or less tuned towards, only want to know about the good news, ignoring the bad news. What still concerns me a little bit, we still have broader problems that are lining up. We still have the Hong Kong issue, obviously. We still have the Taiwan issue. We have a potential new issue with whatever Kim is planning in North Korea. All is not good down there for sure. We have the language from Trump that continues to deteriorate towards China, now calling the virus the China plague, which he in earlier days mentioned as a China virus before he dropped that one. But it's obviously back again, which seems probably to be part of an election strategy as such. We're going to have the other thing that we're going to look out for, the EU start to discuss the EU bailout plan today. There's no real decision to be expected today. That's probably happening later in July. And as we know, there's really much at stake for the EU here in terms of agreeing to that deal or not. I would actually say the pure existence of the EU is at stake, whether or not they finally achieve to talk with one voice. And I think it's of the utmost importance, especially if you think about Brexit happening at the same time. But I have a few charts for you today. The first one, I want to have a quick look at the US retail sales. We had a sharp rise in US retail sales, a big surprise on the top side. Obviously, that is starting to look a little bit like the US having done a lot in terms of fiscal as well as monetary stimulus, and maybe similar to 2008, may actually recover as the first ones globally. On the second chart, that's the same thing. That's retail sales just year over year. You see the sort of sharp bounce. That does look a little bit like an early stage of a V-shape. I'm still not convinced that we're going to see a V-shaped recovery even in the US. But right now, if I had to guess, if there is one country that could see one, it's probably more of the US than anywhere else. On the next slide, this is the Dow Jones. I marked with the two arrows. We had two major tests of this 4-year trend line that comes from down at 15,450. We held that line again in the sell-off that we had early in the week, and I've seen a bounce. We're sort of toying with the mid-daily Bollinger Band. The blue line is the 200-day, which is coming in at 26,336. A lot of consolidation here. It does feel like the market wants to start to get an idea whether this was it in terms of the big recovery and we start to turn down, or if there's more juice on the top side. So that's why I think we're just going sideways right now, really waiting for some new news out there. On the next chart, DXY, we held that big 96.03 FIBO level. The dollar continues to consolidate, has rallied now back up to the mid-daily Bollinger Band that comes in at like 97.61. I would still think 97.87 will be the top for now, consolidation being over before the dollar really is going to try the downside again. I still think a EU deal or the agreement on a EU deal would see a rather rapid move up in the euro dollar, and that would probably be the next leg down in the dollar. Last but not least, this is the gold weekly chart. So really, we are now in the 10th week of fiddling around with this 17-14 area. We could still be very surprised that gold hasn't really made a bigger effort on trying to go to the top side, especially in these unprecedented times where we have a balance sheet of the Fed around 7.5 trillion, ECB north of 7 trillion, and just unprecedented stimulus. You would really have expected gold to perform a lot more in those days, and it just can't figure out which correlation to follow right now. So it just feels it's going to be sticky for some time longer here. I don't really have a clear short-term view in gold. Overall still higher, but I'm a bit concerned that it takes so long to actually move. That's it from me. Thank you very much indeed. Bye-bye.